So let's recap the FOMC meeting. If you did not have an hour and a half to watch my previous live stream, we actually caught the entire session live. There was two main focuses that I have in the FOMC meeting. We all knew that Jerome Powell was going to announce an interest rate hike. The market expected a 0.75% interest rate hike. That's essentially what was factored in. Once they announced the 0.75%, the market still went on a free fall. Leading up to the live stream and leading up to the report, I was working with my Learn Plan Profit group and I announced that I was reducing my position size very aggressively because I just wanted to manage my risk. And I think one of the best ways to manage your risk is you don't need to be in fear and sell your entire position, but maybe reducing it enough that if we do experience a pullback, that again, you put yourself in a position that you can simply tolerate. I said that in the live stream. And just to keep things simple, I will actually link the live stream down in the comment section if after this video you want to check it out. It's just a raw live trading session. And yes, it does last about an hour and a half. You don't have to partake for all of it. But the other thing that I quickly covered in that live stream is the importance of never being afraid to lock in profits. We all knew that the market has still been bearish. And in that video, I talked about this was just a day trade. I had no intention to hold those shares, which is why within that live stream, you can easily see me load off on that position and reduce my position size as we began to trade above $25 a share. And I'm so grateful that we did, especially based off of how things ended up playing out. It was an amazing live stream. Feel free to check it out. But let's keep this video short and sweet and get right to it. Here are my notes on the FOMC meeting. The first thing that you must understand is that yes, a 0.75% interest rate hike was expected, and yet the market still sold off. And it was because of what was said. Jerome Powell said that they still intend to showcase the same type of large interest rate hikes in the up and coming months if needed. And this was something that the market was not expecting. We originally, before the previous CPI data report, we were expecting a 0.5 interest rate hike or half a basis point. But because the CPI data report came in hotter, they justified a 0.75%. Some people, like myself, even thought that they would consider a full basis point. If you thought today was bad, now imagine if they did a full basis point. With that being said, they also talked about the unemployment rate. As of right now, unemployment is at 3.7%. This is nearly at all-time lows. Unemployment is very low, meaning the number of people that are unemployed are very low. They expect unemployment and working towards getting unemployment to 4.4% by next year. How and why would they want to do this? Well, by raising interest rates, they make it more expensive for people like you and I and for businesses to borrow money. When it's more expensive to borrow money, expansion and growth are paused. As well as, if borrowing money is needed, then it eats up into their net margins, and at that point, they're going to have to lay off workers. It is simply more expensive to be in business. And with that being said, they are working towards that 4.4% from the current 3.7% unemployment. I just want to make sure that you guys are aware of that. And to put a figure that's more realistic for people like you and I, that means that 1.3 million jobs will be lost in the United States. With that being said, he said that we need our economy to feel the pressure. And this is what we need to bring down inflation. Again, feel free to watch the FOMC meeting if you want to view this yourself. The second thing that I quickly want to talk about, or the third thing, my apologies, is the housing reset. He quickly talked about how he feels about the housing market. And again, one of the things that he explained is that we are coming from one of the hottest, red hot housing market is what he referred to it as, where everyone that listed their price or listed their home for sale were accepting an offer 10% above their original ask price. And some buyers were even buying houses without even looking at it. This is what he explained, that we experience a growth that has been unprecedented. And all he wants is, or all the Federal Reserve wants, are for those prices to correct themselves. And this is where the market began to take a shift. He talked about a housing reset. He talked about a housing correction. He said for young individuals, it is not realistic for us to be able to afford a house as of right now. His goal is to bring down prices so they get closer to rent. And we are definitely not there. You can do some very simple math. Whatever a house might be worth in your area, do the math very quickly. Even if you put 20% down, which is very unlikely for a lot of people. If you were to put 20% down at a 6.5% interest rate, what would your mortgage be? It would be probably more expensive than a lot of rental rates in the area, and that's not good. This is what he's trying to fix. He talked about a housing correction, a housing reset. That means that based off of all-time highs, he expects at least a 20% drop. That is what a correction means. From all-time highs where we pull back 20%. Something to take into consideration, as that is what he is working towards for our overall economy. The last thing that I want to share with you guys is his final statement. He said, "I wish there was a more painless way to do this, but there isn't." And those are my notes of today's Federal Reserve FOMC meeting. I wanted to make sure that for all those that do not have time to watch that full live stream, I totally understand, even though we did absolutely amazing during that trading session. And for those that are interested in watching it, I'm going to link it down in the comment section, so feel free to check it out. But if you guys have any questions about what we talked about today, feel free to send me a direct message via Discord. That's that first link in the description of this video, or feel free to message me via Instagram, and that's that third link in the description down below. I'm very excited for what's to come. We did a great job reducing our position size. The market is selling off right now during aftermarket trading hours. It's just, again, another opportunity, right? We all know that markets will eventually recover. The simple question to ask yourself is, can you tolerate the time that it will take for these markets to recover? We've talked about position size and never putting yourself in a position that you cannot tolerate. And we've also talked about risk management, the two very core principles of trading and investing. And we prepared for worst case scenario, and today it paid off. I'm excited to see what the market presents tomorrow, because regardless if it's bullish or bearish, there's always an opportunity. Question is, do you know how to take advantage of it? So I hope that you can join us for tomorrow's live trading session, especially if you enjoyed the live trading session from today that you experienced within the FOMC meeting. And I encourage you to take 2 minutes, click the second link down below, and that's going to be $100 off our Learn Plan Profit 2.0. It gives you access to our A to Z video lesson library, our daily live trading session, our private LPP group chat, and also it gives you private access to our TechBuds HQ. It's $100 off right now. It's a one-time payment, lifetime access, and you can watch me trade live as soon as tomorrow. So other than that, I'll see you guys at market open. Make sure that you set your alarms. Please consider dropping a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take it easy, team.